Welcome to Podcast Marketing Secrets, the place for entrepreneurs, coaches, and CEOs who are looking to grow their business with a podcast, become a key person of influence in their industry, and get their ideal clients to come to them, also known as attraction marketing. I'm your host, Al Morenton. My guest today is Jeff Barnes. Jeff is a former U.S. Navy nuclear power plant operator on a submarine, Navy diver, risk management director, technology enthusiast, business growth expert, advisor, and management consultant. Mr. Barnes sits on the boards of startup companies, runs a venture fund, is the chair of the Veterans Council on C-Suite, and the executive director of a veteran-focused nonprofit. Mr. Barnes has helps businesses develop systems and processes based on military principles to create exponential growth. Welcome to the show, Jeff.
Thanks so much for having me here, Al. I really appreciate it.
Awesome. Yeah, then thanks for coming on. Why don't you tell us a little bit about your background and your experience working on a nuclear submarine?
Yeah, absolutely. Well, I started that right out of high school. I decided to enlist in the Navy because I didn't know what I wanted to do with my life, and it sounded like a really cool gig at the time, going ahead and traveling the world for free and actually having them pay you for it. And little did I know how much work and effort there would be in there, and how little of the world I would actually see being on a submarine. Right? I did travel all over the world. I got to go to some amazing places and have a lot of fun with that. But when you're a nuclear operator, we call ourselves nukes. You don't get a lot of downtime. You end up always in the engine room, always working, things like that. But it did give me a lot of great skills for the rest of my career. Going in, especially when you're wet behind the ears, coming out of high school, you think you know everything, and you're ready to take on the world and have all this bravado, and you don't have the discipline, you don't have the focus, you don't have even the skill set or the expertise or experience to do anything really. And so I got a lot of that over the 6 years I was in the military, and just had a great time with it. A lot of it was difficult, challenging, and there were plenty of days that I really regretted my decision to join. But looking back on it almost 20 years later, I don't have any regrets for joining, and it was quite a bit of fun.
That's awesome. That's awesome. Yeah, and I can see how that would, really, build out your skill set for having business, running business and things like that. That's awesome. So is it is
Yeah.
it like is it lonely on a submarine?
Oh gosh, no. You don't get away from everybody. You're stuck there. So 130 to 160 people, sometimes a little bit more, sometimes a little bit less, but you're sleeping right next to everybody else. There's no privacy. There's no downtime really. You're sleeping, four if you're lucky, 6 hours a day, and you're always on call. So there's no real way to get away from people. You try to as best you can. You go hide in the bilge or something like that, and try to disappear, try to be incognito, if you will, but it doesn't really work out. So you definitely learn to appreciate having your own space and your own autonomy after being on a submarine for a long time. Some guys really struggled with that, and actually they would they'd do psych evals to try and make sure you're going to be a good fit for it, and you'd still find out that there are people that couldn't handle the claustrophobia, couldn't handle the cramped spaces, couldn't handle not having any downtime and always being on. And so those guys were eventually removed from the boats. But it's just one of those things that it is life, and it's really hard for people that have never been on a submarine or experienced military life to relate. But once you're in it, it is just you're normal, right? You're not used to, or you become used to all of the operations, always having to work, always having something to do, not being able to see sunshine, not being able to see the light, not really even being able to have fresh food for weeks on end. But you do get used to it eventually.
Awesome, awesome. Yeah, and I imagine like all this, there's got to be a ton of standard operating procedures and all kinds of things to run one of those, and that's key for business too, right?
Absolutely. So I ran what was called our quality assurance program on our boat. And my job was to know where the procedures were, to know where everything was. So we had this thing called the quality assurance manual, and the entire Navy uses it. And we were constantly finding things in that manual that were either wrong or outdated or needed to be updated and things like that. And the QA manual was actually just the first manual you look at in where to find a procedure to do a thing, right? Or where to go. And then the Navy has manuals for the manuals, right? We had everything going. So we had our reactor plant manuals that are, I don't know, 10, 13 volumes deep. And there's just so much information in there. And one of the things that I learned early on is that even though they try to get you to memorize and regurgitate information, there's only a small fraction of information that you're ever going to need to know at a moment's notice. Everything else, you need to know where to find the information. And I'd say that is really key for a lot of businesses as well, is that most entrepreneurs, most CEOs, founders, and these people, they pride themselves on knowing everything. But the problem with knowing everything is that no one else may know what needs to be done or how to do it. And so if it's not turned into some sort of format where other people can get that information, whether that's a video or an audio or a written manual or digital manual, it doesn't really matter. If no one else can find that information, it means you are stuck as the holder of all the keys. And when you're young or when you're inexperienced, you think that's a great thing. Like everybody comes to me. And then eventually you get to the point where everybody comes to you and no
Mhm.
one likes that. You don't want to be that person that holds all the answers to all the things because then you are irreplaceable. And if you can't replace yourself inside of a business, if it's especially if it's your business, you will never grow. You will never scale. You'll never exit. You'll never have a chance to enjoy your life because everybody needs you all the time.
Yeah, for sure. And I could attest to that, myself, because I've been in business my whole life. And when I was younger, I had all that energy, but now that I'm older, and I was getting to this point, as business was growing, where people like were always coming to me, like why is everybody always coming to me? Like why can't they just do things on their own? It's because they don't have an actual procedure to refer back to and all these things. So I've just recently gotten really good at, making standard operating procedures and things like that.
Mhm.
So how did you make the transition like from like, submarine operator to, corporate world?
Yeah, it was a interesting transition. A lot of people, I guess, struggle with that. I did not. I got so bored when I got out. I was planning on taking 3 months off, traveling, enjoying myself.
Hmm.
And 2 weeks later, I had a job because I ended up getting so bored hanging out by the pool in the sunshine. I know that sounds weird. But yeah, I'm just one of those guys that likes to get stuff done and do things. So I ended up getting a referral from one of my buddies who'd already gotten out to go become a boiler inspector of all things. I didn't even know what a boiler was. Turns out a boiler is just a steam generator, which we used that uses fire of some kind or electricity. We use nuclear power. So it was a pretty simple transition for me. But the thing that I loved about that job was the autonomy. I went from being on a submarine where you have racks. We don't call them beds, we call them racks. And so you have racks stacked three deep, and you're sleeping. If you're on the top rack, which I always wanted to be, you have two people right below you. You have three more guys right next to you, and you're inundated and surrounded by people all the time, and everything that comes along with that. Right. Well, I didn't want that anymore. I did not want to be in a cubicle. I did not want to work in a nuclear power plant anymore. And I did not want rotating shift work, which is what most of the jobs were available for guys like me. And so I found this job, and what I loved about it was that I could have the autonomy. I could work from home. So I've been working from home for almost 18 years now. And I had my own office. I had a corporate car, a corporate laptop, all this other stuff. And then I just traveled. So I got a couple things I really love, which was the travel and the autonomy. And that was really important for me to get into that because I would have hated life otherwise. I realized I did not like being having somebody else in control of my time and my life 24/7, 365. So transitioning to something like that allowed me to have this incredible opportunity was really simple for me. And all it meant that I had to do was do a good job. So I kept this. And that was great. And that worked out really well for maybe a year or two. And then I got bored again. So I ended up asking for and eventually getting several promotions. By the time I left that company 12 years later, I was in charge of the technology division. I was, running international projects. We were raising capital. We were doing all that sort of stuff. And so I think it was a little bit of my mentality. There was the discipline that came from the Navy. There was the ability to see a project through to completion, and getting great results was important. And of course, all of the operating procedures along the way and learning a little bit about leadership, a little bit about management in the military definitely helped. But I would say that the transition for me was actually fairly simple because I wanted that autonomy and I found it.
That's awesome. That's really cool that you were able to find it like sort of like quickly, and it was an actual like referral from a friend kind of a thing too.
Yep.
So it wasn't like this great journey that you went on. You found it. yeah, you were smart enough to realize, this is my thing right here, and run with it. And so working with that corporate position, you also learned about um like raising capital and things like that.
Yeah, yeah. And along the way, I was, like I said, I was generally a pretty bored guy. I'd just get bored with things pretty easily. So I ended up going and looking for the next new thing, the next shiny object. I think a lot of people, when they're younger, 20s, 30s, they probably are doing that still. And I don't think I was any exception. I just happened to get bored faster than most people, right? And the thing that I did not want was I didn't want to work 40 years for some company or multiple companies, and then maybe eventually in my 60s be able to retire and then go see the world and then have the money to do all the things I want to do. I learned very early on that I wanted to be independent. I wanted my personal autonomy and freedom, and I wanted money. I wanted money in a bad way. So I was always doing side hustles while I worked at that company. I became a financial planner for a little while. I was investing in real estate. And along the way, I learned some really important truths. And one is that building relationships is vitally important. Learning how to sell is a master skill, and selling anything from your ideas to your ability to raise capital is sales. It's just a different thing. You're selling something that's intangible for a really big amount of money. And I started learning all these things along the way. And then because I was spending time doing that, I ended up getting my MBA as well. I got an opportunity to take over, and actually we created a whole new department for this to go help the company with innovation, to go out there and find companies that we wanted to acquire or invest in or partner with. And so I travel all over the world and had people travel all the world to see us. And we ended up doing some pretty phenomenal things. We ended up investing in or acquiring dozens of companies, over $1 billion in capital raised throughout that process. And I got to learn about how much money there really is in the world, what that process is like to raise capital, as well as invest the capital and all of that. So it was a really good time. It was definitely a huge learning experience for sure.
That's awesome. That's awesome. And yeah, one of the things you said there too is like you got to understand how much money there actually is in the world, and like there's an actual abundance of it once you unlock the right avenues, right?
Oh, absolutely. And people don't realize this, right? There's $3.7 trillion dollars. That's a lot of zeros, right? I think 15 if I remember correctly. But $3.7 trillion dollars in dry powder, meaning money that is not invested really. It's sitting there, earning 1, 2%, or sometimes a negative percentage, depending on what year. And that's just money that's sitting there waiting for great opportunities. When I was working in this corporation, we had $260 billion under management. So even a 1% per year return was $2.6 billion in returns. Like that's phenomenal. That's mind-boggling to see that. And so sometimes the capital markets, they wouldn't write a check unless it was more than $50 million, 50 million, because it was too much energy, too much headache to deal with it. Right. That is, it's really hard for people to wrap their minds around that. And of course, when it's a corporation's money, it's really easy to say, oh, well, that's a company's money. And even those people that are managing that amount can't foresee themselves making anywhere close to that. And as a result, there's always this scarcity mindset that people deal with, even when they're working in those markets. It's really hard for a lot of people to break out of that.
Yeah, for sure. And it took me a long time, and there was one day when I remember the day I was in San Diego and I just realized it was like, oh my gosh, and then my life changed that day.
Were you right by the yacht club by chance, looking at all the money just floating on the water? Like it still amazes me, right? You go out there to the marina in San Diego or any nice city, and you just see the money sitting there. I see massive amounts of dollars just floating on the water that no one's even using, right? Most of these
Yeah.
people, they park their boat there, they put it in the slip, they see it twice a year at best, right? And we're talking yachts that are worth 20, 30, $100 million. Man, it's pretty incredible.
Yeah, for sure, for sure. So, you mentioned something about sort of forget what the term you use, but like, sort of like strategic partners,
Mhm.
basically. And so how do you find and qualify strategic partners in your field?
It's really, it's a combination of building your network, understanding business models and use cases for technology and ideas, and then talking to people, right? You know, really good example. We have clients all the time that are looking for strategic investors. In other words, they bring more than just money. They
Yeah.
don't want 100K or even 500K. They want 5 million, 10 million, 20 million. And that kind of money isn't, a lot of individuals are not going to go write that kind of check, right? So then you're looking at things like venture capitalists, if they want that. You're looking at strategic corporate venture arms. You're looking at family offices and private equity. And the reason you're looking at those is because one, they have the money, but two, they have the connections, right? And we all know the 6 degrees of separation, right? You can probably get connected to almost any person on this entire planet through 6 degrees of separation, right? And so if you think about it in those terms, you may not know who to go to directly to find a strategic investor or strategic partner, but you might know somebody that is 1 or 2 degrees away from that. That's why LinkedIn is so valuable for a lot of people. I can say, okay, well, I want to, for example, I'm going to go out there and find somebody who is, building or drilling oil wells because I might have a technology that I think is going to make, finding the oil better, easier, whatever. Well, if that's the case, I may not want to go to just every random angel investor out there to try to get them to invest. I may want to go to the people who are drilling the oil wells. Well, there's even a few other people you might go to. You might go to the people that sell the equipment to the folks who are drilling the oil wells. Because in your mind, this thing could help make their job better, more lucrative, more profitable, whatever. And so I might go after those people. Well, then I need to know who in that company or those several companies I can reach out to. And sometimes it's named by position. Sometimes that you can go out there and find RFPs, requests for proposals. Corporations and governments will do this all the time. They'll put something out on a internal or external, for lack of a better term, a bulletin board. It says this is what we're looking for, and there are companies out there that can help you find that. But that's how you go and you start finding these strategic investors or strategic partners.
Right on. That's awesome. That's really cool. And it's like, it's almost like a chess game, you know? It's really cool. And, and it's almost like how you're strategically moving all these pieces, and it's a skill, you know,
Mm-hmm.
it's a skill, and then there's a lot of trust involved, a lot of different factors involved, and on the outside looking in, it seems like you're not doing any work at all, you know, but there's just so much strategy and like sales and convincing and all these different
Yeah.
things that go along with it in order to get that ball rolling. And um there's tons of revenue that are involved with that, and
Oh, so many different things, right? So I'll give you an example, a real world example. We had 250 remote employees that were going around doing what I was doing in the beginning, boiler inspections, but really it was loss control inspections. You're looking at businesses and all this. And 250 employees is hard to manage, right?
Mhm.
When they're always out in the field and you don't see them but a couple times a year. And so we had to develop technology that was going to allow our experts back in the home office, the PhD level people that could answer a lot of these really technical questions that our field had. But how do you get the person that's 1,000, 2,000 miles away to be able to answer a question for somebody who's out in, let's just say, Tulsa, Oklahoma, and they have a question about something they're looking at, but they don't know how to answer it? Well, the old school traditional model was take a whole bunch of pictures, write up a report, send it back to somebody. Somebody else finally gets to that report. They look at it. Long story short, it takes weeks, sometimes months. Sometimes you need an answer like right away. Well, when LTE and 4G came out and then eventually 5G, you could go out there and find technologies that would allow us to directly communicate. And this is long before Zoom came around, long before all of that stuff. So we didn't have that. So we found companies that were able to put together remote visualization tools, and as a result of us doing proof of concept and beta trials with these folks, we would put those tools and those headsets on our staff, and then we would build out the rest of it so that our experts back in home office could see what the person was seeing in the field real time. And as a result, we could then gauge how successful that was going to be. And that's what led to a potential investment, right? And that's what led to that conversation and bringing it over to our board members and our strategic corporate venture arm, right? And so it's just understanding the use case and understanding the pain points, really. This is like marketing 101. What is the pain point of your ideal client? Not what is your solution, not what is your product or your service, what's the pain point? And if you can figure out what the pain point is, you can figure out who has that pain point, then you can figure out how to fill that gap. And so that's a lot of what I was doing and what our strategic arm does.
That's awesome. And that's just basic sales too, right? Whether you're
Hey,
selling
you
a
got to
gym
convince people.
membership or anything else, you
Yep.
know, it's crazy, how it all just no matter what level, it's almost all the same when you actually break it down,
Yep.
Really cool actually, you know. So I was saw that you have this Angel Investors Network.
Mhm.
So can you tell us a little bit about that?
Yeah, absolutely. So AIN has been around since 1997. And what we do is we put investors together with investors in great deals. Or I mean, investors together with entrepreneurs in great deals. And what we do is we put on these live events. And we used to do several times a year. I'd be, 12, 13 events a year. And think about Shark Tank or Dragon's Den for those people in Canada or the UK. So you put a bunch of investors in the room, you put a bunch of great ideas and entrepreneurs up on stage, they pitch, and then magic happens. So with that, we've spent a lot of time working with both investors and entrepreneurs and founders. And of course, we work with fund managers, we work with real estate investors and people that are buying and selling businesses. We do a lot when it comes to how to structure a deal, how to find a deal, how to vet a deal, how to eventually write the check or make the investment. And then what do you do after that, right? Most people forget, I think, that you don't make your money on a startup investment until there's a liquidity event down the road, right? Until there's an exit, until something else happens. It's not like you're going to get paid monthly distributions from a company that doesn't have monthly distributions to give. So instead, you have to figure out how to structure the deal in the right way and then make an informed decision. If you're going to put in money, can I wait 5, 10 years sometimes to get that money back? And hopefully I do, right? And then within AIN, we also bring together cash flowing opportunities, real estate investments, private equity kind of deals so that people can get those distributions along the way. But what it comes down to, again, is building up that network, right? So having a group of people that I'm not an expert in all things, but if I have an opportunity to invest in, let's just say, a biotech device, well, I'm probably going to want somebody inside of my network to do the due diligence on that and tell us if it's going to be a legitimate investment or not. And that's how that whole thing works out. So we do leverage that strategic and network effect as well to inside of all of our deals.
That's awesome. That's really cool. And it's cool that you also like provide other kinds of investments that people could see a return on quicker,
Mhm.
allowing them to invest in the longer term, deals, kind of a thing. Um, so how do you get people like involved with that network?
So, obviously we have our website and people come there all the time. We get 10 to 20 new pitches every single day from entrepreneurs. So that's just happening naturally and organically. But then doing our live events is really where it comes in, is that, when it comes to investing, I'm not saying it can't happen or doesn't happen, but people like to press the flesh. They like to see somebody face to face and shake their hands and get a chance to know them. It's really hard to do on a webinar. It's really hard to do via email or video sales letters and all of that. So we do these live events as a way to bring in people so that they can see these deals, they can meet each other, they can hash it out, and then we have our members get to essentially network within their own little circle and say, hey, what deal do you have? What are you working on? What am I working on? Hey, I need help with this thing. I'm looking for other investors who want to come to this deal with me, right? So it's a matter of going out there, being seen, and then just getting people to show up at our events. And then once they see us at our events, they're really excited to go on to the next stage, which is just be part of the membership.
That's awesome. And so with the entrepreneurs that you like you find that they seem like worthwhile working with. Do you help them with if they're newer to that kind of a process?
Yeah, absolutely. So if somebody wants to come and pitch at our events, we'll coach them on their pitch deck, their presentation, how to even speak to investors, right? Not to mention what are the deal terms, how do they help, how do they structure their deal in a certain way. And I actually just got off the phone with one of our folks who was at a previous event just a little over a month ago. And they said, honestly, we haven't been able to stop ever since then because just from that one event, they're getting all sorts of different opportunities and things coming out of that by just being present, by showing up and giving their presentation. So we help them all the way through that. So now they know, okay, we have opportunities. Now it's not a matter of where's the opportunity, it's which opportunity do we want to go after.
That's awesome. Yeah, having choices like that is always cool because you could find out what's best for you basically. So that being said, like for companies that actually want to scale and grow, into the multi, whatever, 8, 9 figures, whatever. Um, the do you recommend getting investment and like strategic partnerships and stuff like that to scale faster?
That really depends on the business, right? And it depends on how good they are at marketing and sales. So companies that are good at marketing and sales don't necessarily need to raise a lot of capital. However, there are companies that are very either R&D or hardware and capital intensive, right? So if you look at Tesla, when Musk launched Tesla and I think it was the Model S, what did he do? He did a pre-sale for the Model S. And I don't remember the number of people that he got to put $1,000 down, but it was a lot, right? Well, that money can then go towards building up the infrastructure to deliver that. As long as everybody knows, hey, you're not getting this for 6 months, 12 months, 2 years, who knows? So that's one way. That's essentially crowdfunding, right? Or crowdsourcing in some cases. But other companies that are not great at sales and marketing, and they need a bigger team around them to help make it happen, or they need to do more R&D, or they're waiting for patents to get through, or whatever it might be, they might need to raise capital. And if they do need to raise capital, what we strongly encourage them to do is raise as little as possible to get to the next stage. And that means whether you are pre-revenue napkin stage company, you need enough to get to like proof of concept, right? Does the product, service, technology, whatever I'm building, does it actually have a need in the marketplace? Can I prove that people want this? And if you can do that, then the next stage is to start getting more traction. Okay, are we getting sales? We're getting customers, we're getting users. And the companies that struggle the most are the ones that give up too much equity too early on. Some of them will raise way too much money early on without a strategic plan on how to spend that money. And as a result, you'll see companies that will raise $100 million and be out of business 12 months later. Why? Because they didn't have the maturity, the advisors, the people on their team to help them spend it properly, or they didn't have a plan at all, or they hadn't even proven that there was an actual need in the marketplace for what they were doing. So yes, we advise and we help them with that. Then if there's a company that is looking to scale up and they really want to hit that 8, 9, 10 figure valuation, what does it take? Well, it takes rapid growth, right? And what VCs want to see, generally speaking, is 300% year over year growth with $1 million ARR. And then they will start getting interested and they'll want to put more, fuel on the fire, for lack of a better term. But not all companies need that, right? You don't necessarily need to have a 300% year over year growth and $100 million investment to make that happen. You can go and do effective sales marketing strategies and grow organically. And I think that's generally a better way for most companies to grow, is organically without a lot of capital infusion. Even though it's harder, it's slower, it's not a lot of fun for some people, it's very stressful. But then you retain control of your company and you know what the market's looking for, right? The pressure that comes with a big amount of capital is intense, right? And you end up start putting people on your board and into your company that maybe you don't know, like, or don't have the same values as you. And so it makes it a little bit more challenging. However, like I said, everybody has their own opinion, their desires on how they want to grow. And if somebody's been through this and down this path before, and they've had a couple of successful exits, and they have somebody dangling a $20 million check to scale this thing up rapidly, go for it, right? But just realize that it takes a lot of time for a lot of people that have never done this to go out there and find the capital. So would you rather spend your time looking for the capital, or would you rather spend your time developing your business, developing your sales and marketing, and scaling the business organically?
Yeah, for sure, for sure. And yeah, and for like uh smaller entrepreneurs, like smaller companies that are just getting traction and stuff like that, it could be confusing for them too. Like which way to go, and the funding always seems attractive to people, but I've seen a lot of people get hurt, like you were saying, like they get take too much money up front and they were out of business like less than a year later because of different things, or they didn't uh get support, they just got money, and all this kind of stuff. There was no,
Mhm.
like you said, like that strategic kind of thing going on, wasn't there. And when my company was younger, uh, there was like a boom going on about 6 or 7 years ago. And I was doing a lot of talks and getting a lot of people wanting to invest in my company, like just like like literally handing me these cards and this and that, and we want to invest and have meetings and this and that, and I always told them no, because like first off I said, well, like, what can you do to help me, besides money? And they never had a really good answer, for that, and I didn't need just money,
Right.
I needed like, like advice on how to grow and scale properly, at each stage, and because there's different stages and phases of a business, and nobody really had that, so I always just shied away from it. And a lot of people that I know that have businesses that are similar to mine that took the investment, they're not in business anymore, and I still am.
Right.
So I don't know if it was good or bad that I did that, but
Well, it
I
teaches you a lot, right? It's really difficult to know where your business is going to be in 3, 5, 10 years
mhm.
for anybody, right? We all have an idea where we want to be, but we have all heard the term pivot, and that happens. Now, the problem is that again, it's the pressure that comes with the money that makes people do foolish things, right? A VC puts in $20 million, $100 million, right? They're going to expect a return. Like, there's a company out there, Thrasio. Thrasio was a roll-up company bringing in Amazon e-commerce businesses. And we looked at this model very, very heavily. Buying a bunch, in fact, we actually still do this, but you buy a bunch of companies, you roll them all up, and now you go from $1 million per year companies to $100 million per year company. Well, the multiple on that is great if you can make it work, right? If you can align the operating systems, the marketing system, the sales systems, if you can consolidate, if you can leverage economies of scale, then it's great. Thrasio raised $3 billion to do this. One of the largest aggregators of all time that did this, raised a lot of money, and about a month and a half ago, they filed for bankruptcy, right? Now, that happened in a very short period of time. I'm talking like 2020 to 2023. Raised $3 billion, now filing for bankruptcy. That's a huge issue. And again, it comes down to there's a lot of pressure on that capital because, hey, I've invested a lot of money with you guys. When am I going to see traction or a return or something? And so management might make short-sighted decisions. They might make hasty decisions. They might not know what decision to make, but they make one anyway because, well, I need to. And so capital brings a lot of pressure with it. And if somebody doesn't really know what their business is, before they take that capital, they're in a lot more trouble than they think.
Right. Yeah, yeah, for sure. For sure. So, as far as like your business, and the way you market and stuff, how does podcasting fit into that?
Yeah, well, just like you said in your intro and your very beginning, it's brand recognition, right? It's credibility building. It is when a company comes and they're like, "Hey, I want to raise money." Great. Who knows about you? Oh, no one knows about you? Okay, well, how does do you have product market fit? Do you have an MVP? Do you have, proof of concept? Do you have anything to show that this is going to work in the marketplace? Well, we kind of have an idea, right? And it's if somebody wants to invest in a company, they want to see that it's a real company, that it's actually out there. They want to know that the person they're investing in, because it's not just the product or technology, it's also the management team. We want to know that the management team has the credibility, the experience, the expertise to do it. Podcasting is a big part of that, right? Because if I have a new technology or a new product or something that I want to bring to market and no one's ever heard of it, no one's ever seen it, it's a lot harder to raise the capital. It's a lot harder to scale a company. On the other hand, if I'm bringing a product to market and I've been on 30, 40, 50 different shows in the last couple of months, then you're starting to get that traction, that brand recognition. People are going to start seeing you. You can point people to that. Like, look, we had this press release, we had this podcast, we were on this show. We got these kudos from these people. Podcast hosts can give great feedback, and a podcast host has their own tribe, right? And so let's just say, for example, you went on a really big, prominent podcast, and the podcast host is like, "Oh man, that sounds like a great idea. let's talk. I want to look more into this. If he says that or she says that on a podcast, that's like an indication to the listeners, hey, I should look at this too, right? So it's a lot of the credibility, the brand building, the awareness, and then of course there's always backlinks, which is great for SEO too.
Yeah, for sure, for sure. Yeah, yeah, all of that stuff. Yeah, and yeah, that's why I love podcasts on both sides too, hosting and guesting. So is there like one big idea or takeaway that people should take from this episode?
Yeah, I would say that the most important thing, based on what we've talked about today, is getting clarity, getting absolute clarity on where you want to go, what you want to do, who you want to serve, how you want to serve them, right? And then the clarity of what's the problem you're solving. Too many entrepreneurs come at us with a solution-oriented approach, and that solution is half baked. It's because, oh, I had this issue, so obviously everybody else does. That's not true, right? You could be such an extreme minority that there's no market out there. On the other hand, it could be such a broad and vague problem that no one's going to really see the value in you solving that because it's so vague, right? So I would say clarity and figuring out what you want to do, where you want to go, and how you want to do it is vital to your long-term success.
Yeah, that's huge. That's you know, like people like I want to you know, like really focus on that. Like that's I see so many business owners like they'll put like so much time and months and years and then like hours in the day and everything to build out this product that they never tested and nobody actually wants,
Right.
you know, they just like wasted all this time and money and mortgaging their house and all this kind of stuff. So that is so crucial to have that clarity, as you said. So well, thank you for coming on the show, sharing your insights with us. What's the best way for people to like follow you, get a hold of you, etc.?
Yeah, best place is you go check out angelinvestorsnetwork.com. And then I'm on LinkedIn. That's the main platform that I'm on. And it's just Jeff P. Barnes is my handle there. But yeah, if you go to angelinvestorsnetwork.com, that's where you'll be able to find a little bit more about me.
Awesome, awesome. And we'll be sure to include all your links in the show notes for the video and audio as well. All right. And thanks again for coming on the show.
Al, appreciate it. Thanks so much for having me.
So that concludes this episode of Podcast Marketing Secrets. This is Al Morenton signing off. I hope you have a successful day.